Okay, we are hosting tonight a person. This is a second YouTuber that I've really followed for a while that I've managed to get on the channel. The other one was Ben Boyce, who's more talking about postmodernism and college campuses. This is probably as not postmodern of a guest as you can get. This guy is pretty much talking brass tacks, financial news. Please welcome Mike from Rethinking the Dollar.
Ramon, thank you for having me on your show. Looking forward to some good chit chats and good back and forth tonight. So thanks for having me on.
And I think it's a good change of pace because a lot of times we talk too much about politics on my channel. Also talk a little about religion, talk about sports, but we don't talk enough about the actual markets. And I did want to get some background. What was the motivation for you to become educated in currencies, markets, and economics in general? And then why did you decide to take all of that knowledge and opinions to YouTube?
Good point. Good question there. And so for me personally, it started in my younger years when I was involved with sports. And so during my right after college years, I ended up playing professional basketball. So I had the privilege of kind of living out my dreams in a sense and traveling the world. And through having lived in various countries from everywhere in South America to a couple places in Europe, I was fascinated with currencies. And so, receiving pay in most of those currencies, I was always curious as to the exchange ratios between the dollar and, say, for example, the Argentina peso or the Uruguay peso or the Chilean peso or the Swiss franc. And so, everywhere around the world, their exchange ratios always fluctuated. And so it really got me to dive deeper into why that is. And in doing so, I've learned about a lot of history about those countries, and then came across the idea that all those fluctuations had to do with a lot of market manipulations, as well as just poor fiscal and monetary policy. And then it really got me to thinking about here in the United States of America and how the dollar is not much different, other than currently being the current reserve status currency, the #1 currency on the planet. But other than that, we're all in the same boat. So from there, from years and years ago, I kind of fell in love with the idea of educating myself in monetary matters. And then now to this day, I still do a lot of traveling, and I'm still, curious about how the government and monetary policy really impacts the people's purchasing power with their currency units. So that's kind of how it started for me.
So were you in like the European basketball league? Did you play against like Real Madrid and Maccabi?
No,
and or some of those leagues? Or
no, I did have a pleasure of playing at that level. And so when I was in Europe, I played actually in Switzerland, couple tournaments in France and in Iceland. So those are all professional leagues, but not the Euro Cup type level. So those, I think I would like to say that if I had kept playing, apart from injury, I might have had a chance to work my way up to those levels of basketball. But like anything, if you get a chance to, put a ball in the hole and to do it and be paid for it, it's still a blessing. So I never got a chance to play against that level of competition directly, but in those countries, yeah.
All right, that's great. I mean, the only sport I've ever been good at was GoldenEye, which is not really a sport. Would you say that corporate financial news networks like Bloomberg, CNBC, also newspapers, Wall Street Journal, are subject to pressure from their own shareholders to only feature market news favorable to their own stakes? Or do market forces compel them to be honest in order to maintain credibility? And compare that to like the rest of the media.
Right, that's great there, because a lot of people are not aware of the fact that the major mainstream news, financial, you name it, they're all under the window of a small conglomerate of corporations and probably more so families. And so I don't know the exact stats or the figure, but I think I heard something around the fact that the major news networks are owned by, say, 5 or 6 major corporations. And so then that in and of itself is a monopoly, to where when you have everyone owned by a small few, there's going to be some type of skewed news to where you'll never get the complete truth. So in my opinion, I believe that all the primary financial networks, whether it be Fox Business, CNN Money, and all those other businesses, they have to follow the mainstream narrative. They all have to kind of report on similar subject matters. And so even if you happen to watch those, whatever the news subjects are, they're all kind of the same. There's never any extremes. They're all mellowed out and saying things such as, like right now, especially, I was watching earlier about the recent market dip as of today, and they were saying this is a time to buy the dips, buy the dips. Never will you hear them say run for your life, get out of the markets because it's coming down. They're always going to fit. They're always going to spin it to make it look like everything is calm and collective. And that's all by design. And I understand that completely. And most people who are in the alternative media world, they understand that there's two to three sides of a story. You have the front side, you have the back side, and it's your responsibility to read along the edges to formulate your own truth. So I personally don't really pay much attention to the mainstream narrative. That's why I love digging a little bit deeper to find out what the other side of the story is. And I know that from the mainstream news, you're not going to get much of what you need to know. And also when whatever news you do get from them, it's probably 2-3, maybe a week old to where it's outdated the news already. So definitely it's a biased perspective because they have to maintain a mainstream narrative that everything is fine and anything else would cause panic in the markets and things like that. And they can't have that.
Okay, that's kind of what I was kind of expecting, you know, because there is such a talk about mainstream media in basically the rest of the news being very skewed because of their political bias. But I was expecting maybe the market would force, because if you keep getting bad advice from the same source, I would think people who need to take care of their money would you know, kind of keep them accountable.
Yeah. And I don't think that people actually consider it bad advice because we haven't had that quote unquote complete market crash that a lot of the alternative media people are expecting. And so a lot of people, they more so get a quick glimpse at what might be happening in the markets for that day. But majority of people who actually have some skin in the game as far as having portfolios that's diverse in stocks and bonds and things like that, they more so listen to their financial advisors, I would imagine. And so, you know, this conversation here is solely just my opinion, of course, but I would imagine that if there's any type of hiccup in the market, you'll probably right away call your broker and say, hey, I'm a little concerned. And then at that point, your advisor or whoever's handling your portfolio is going to say, you know, don't worry about it. It's just a correction. You know, this is a great time for us to probably purchase a couple more shares of this and that. So I believe that people don't really listen to that as solely what's happening. They probably more so consult with their financial advisors as well. And as far as their own personal advice and things they're going to do directly. So, but they listen to it, no doubt, because everyone, especially retirees at this point, I'm sure they're concerned with a lot of this, you know, fluctuations in the markets because they can't afford to have any type of true correction. So I'm assuming that those of the older generation, they're probably a little bit more concerned than, you know, the younger people such as you and I probably.
So the current atmosphere, just like you were saying, it's inadvisable for anything, not just markets and finance, to just rely on one news source. So what are your most frequent ones? Would you use? I like using Zero Hedge. I look at Motley Fool once in a while, and I watch Market Watch just because they have like some good dials and whatever. But
Right.
what are your most frequently visited sources?
Good point. Good question there. So I personally, I follow a lot of the gentlemen that I've interviewed on Rethinking the Dollar who have either newsletters or they have other YouTube channels. So I've, you know, whenever they post something, my phone goes off and I read the subject title, the subject heading, and I'll listen to it depending on the time of the day or my availability. But other than that, I tend to search just more so keywords pretty much every day to comb the news around the planet to find out what's going on. And for me, what's really become more of importance to me at this point is anything to do with currencies, especially the dollar. I study everything from China and Russia. Anything happening in that area, I want to know about. Anything in the precious metals X sector, I want to know about. Anything in the cryptocurrency world, I want to know about. And then I also study retirement, whether it be pensions, 401k, any of those search words there. I'll just Google it for the day, and then you'll be surprised at the amount of stories that pop up that have some type of heading this eye catching. And then if it's, you know, to the point where I feel people need to hear about it, I'll go ahead and do some type of news video for the day. But more so keywords for me. But yet all the gentlemen, I'm sure that you're probably aware of, the Greg Hunters, the Michael Pintos. We have Wham, World Alternative Media, Josh, and can't think of my guys' names offhand. But a lot of guys that have joined me on my show, I follow those guys. So we all kind of keep each other on our toes with the latest stories, I believe.
Okay, so let's move on to like the actual what's going on, and this is some stuff that some people have been predicting it, and some people are claiming that it's not going to happen. But there's the debt crisis, of course, which should be really in people's minds. And last year, I think it was in June, Senator Ron Johnson projected in the next 30 years, the U.S. would have an accumulated debt of $129 trillion on top of the $20 trillion we already have. So let me frame it this way. Progressive critics from Robert Reich to Chris Hedges blame the debt on defense spending, corporate loopholes, and neoliberal policies that support the rich and increase income inequality. On the side of fiscal conservatives and free market advocates, they say that it's due to entitlement spending, large state pensions, and a mammoth bureaucracy. So which of these do you agree with more, if at all? Do you see any truth in both of these perspectives? And what do you think is missing entirely from the fiscal policy of both major parties?
Well, I believe that the statements you were ending with kind of summarize the whole entitlement society we live in. So based upon the fact that our whole economy is a debt-based and a debt-driven economy, it's spurred on by entitlements to the point where those figures you gave out, but I think I heard something about $129 trillion by 2030 or something like that. Is that correct?
Well, in the next 30 years.
In the next 30 years. So I would say that those figures are already here right now. If you look at the unfunded liabilities, all the liabilities that are off the books, stuff that we don't even count. And so if you go to the debt clock and you actually look around that page there, you'll see figures that probably equal that right now as far as what's owed, whether it be with our on the books, which is our 20 trillion and climbing. And then you have the Medicaid, Medicare, Social Security. You have all of those other things that they are promising. And we have federal pensions and whatnot. That is going to be a ticking time bomb, which, they're going, I believe the whole pension situation is a problem in and of itself. But you tally all that up, we're at 100+ trillion right there. And so I believe Lauren Koslikoff, the professor, he wrote about, things such as this, we gave figures that might be even a little bit larger than that. So we're already at a peak point of debt to where now it's a matter of how much can we continue this to go on. And on top of that, then we have talk about the interest payments on the current debt we have. Can we continue to fund those things? So we're reaching a point where I don't think our creditors are going to be around for much longer or be willing to lend us the type of funds we need to stay afloat. So I think monetary policy as well as fiscal policy has already collided. And it's just a matter of now, how does this thing come crumbling down? So, yeah, we're already at our peak. And now I think the next year or two, we're going to be, confronted with the reality of how do we sustain this? Because with these tax cuts that were put in play, deficit spend. I was actually listening to Greg Hunter's interview today with Michael Pinto, and he was calling off some alarming statistics on how if you factor in what's projected, they're saying maybe $1 or so trillion deficit a year. That's on the good side. Not to mention all the other expenditures that's going to be tackled on top of that. So we're going to be running a 2-3 trillion according to what Michael Pinto was saying. So how do you sustain that? How do you pay the interest on that?
So is the defense spending issue that the other side? I'm getting kind of an echo.
I can try to cut it down on my end, no problem.
So is the defense spending issue kind of overplayed in this debate, or is that also, because I think that defense spending, just like entitlement spending, is a major problem.
Mm-hmm. Yeah, I do agree. So that's another thing. Like defense, I haven't even really looked into that much, knowing that I hear a lot about how we have to beef up the military, we have to improve all our old warships, and everything we're doing is everything we possess is outdated. And so the fact that they're trying to, increase and to build up all of that, it leads me to believe, what for? We should have been doing that all along. So I'm not sure how we're going to have an infrastructure, because the roads, like especially in Michigan here, the roads are unbelievably bad. So I'm sure it's a lot of other places as well. But the infrastructure spending with bridges, roads, then you got the wall they're talking about building. So you tackle on defense. I'm not sure how that's all going to be covered, equally, to where there's going to have to be some type of give and all that. But defense spending is obviously they plan on using that defensive spending with something. So that might be the catalyst for some type of war that might be needed if this whole credit market kind of comes coming down. So we got to go defend somebody or defend ourselves against other people. So we'll see.
Yeah, I was thinking of it, and I guess you kind of answered the question, but I see too much defense spending because I'm kind of a Rand Paul. I'm more interested in his views than necessarily other people. And I know that's going into political, but I think of sort of this defense spending as like a right-wing paint job on Keynesian economics. It's like, we'll stimulate the economy by, buying more weapons. And in reality, I believe that's sunk cost. Just like when you create lots of public works projects like FDR did that, you know, you're basically moving a lot of capital to spend on these large projects, but over time those jobs are going to disappear unless you keep doing more and more of these projects. They're just not sustainable.
Right. And on top of that, in the defensive spending, like how many people will actually feel that in their pocket? I'm not sure. We have, I'm sure, three, I don't know offhand, but I'm sure there's 3 or 4 major defensive military type companies that, you know, do all that work. And so not too many of the public actually work for those companies, I would imagine, so where it's not going to really stimulate the economy that much. So I think it's more so to reassure or to tell the world that, hey, we're not giving up on our military might, and we're still willing to defend our currency by, you know, beefing up our security and beefing up our military tanks and flight and airplanes and all the stuff that's already outdated, so that we can continue to, you know, defend the free world as they we're always told we're doing. So I think it's more so just to invest in our defensive programs for war one day, because if I believe during that Obama's administration, they did a lot of they made a lot of cuts, and like, you know, a lot of people got fired and had to resign, and so they basically gutted the military. And so I think now Trump is like, you know, we need to start building that back up now, so let's spend some money on it. So yeah, let's borrow some money to spend. So yeah, we'll see what it's all for, but I believe it's not going to be something for peace sake anyway.
Yeah, I think, and if it is, then it's basically a sunk cost, because you're basically paying for something you're not going to use.
Right.
Let's talk about market bubbles, because I remember watching about the 2008 financial market, a fascinating documentary about Royal Bank of Scotland and Denmark. And it's always been, you know, kind of a matter of conjecture, who causes these, who doesn't, or who's to blame. So can you explain why market bubbles happen? Is it due to government intervention, reckless speculation, or a combination of the two?
Right. And so I believe, to my knowledge, having studied for the most part the 20th century when it comes to monetary and fiscal policy, and how the central bank, Federal Reserve Bank rather, was, since it was created in 1913, how they themselves they've positioned themselves as like the primary, the lender and the borrower of last resort, kind of, and how our government, the United States government, has really used them as a crutch to pretty much fund and to expand themselves. So going back to when we first entered into the wars, and World War I, World War II, and everything since that point, the United States government, in order to actually fund itself, began basically borrowing. And so the moment that the Federal Reserve began lending money directly to our government in form of purchasing bonds, that's when we let the cat out the bag, and the government began growing to the point where from that point on, we had all these entitlement things like that of that nature. So I believe that the central bank was put in play to actually find a way to get into the lives of us, the lives of us all, in the form of issuing credit, i.e. the Federal Reserve notes, through the government to us, so that they always have something for us to where we are indebted to them in that sense. And then the government in and of itself, in order to keep this whole thing going, has continued to borrow to the point where they've reached their limit in and of itself. So now we are in a situation where the government is dependent upon borrowing, and the Fed is the only person that can probably keep this thing going, because I believe that now, as people realize that we're not able to actually pay all our debts back, when it comes time to begin borrowing now, we're going to have the Federal Reserve probably lend it directly to us in the form of monetizing the debt. And then when that does happen, I believe, which will probably be sometime in the next couple years, give or take, that's when the whole recession and the whole market, you know, that we're currently entering into, is going to really come crumbling down. Because if no one's willing to lend us money, but we still need money to borrow in order to function, then the Federal Reserve is going to begin printing, and then that's the whole quantitative easing, then the UBI, all those ways that the central bank is going to find ways to inject money into the system will come into play. And that's when we're going to really feel the pinches of what some people say might be a hyperinflation type of thing. So the fiscal policy and monetary policy have gone hand in hand since the creation of 1913 of the Federal Reserve. And the question will be now is, how long can it go on? And once the people wake up to this reality that we've been duped all along, this was all a part of the game of expanding the United States government to the point where it's too big now to sustain itself, then what will we, the people, be willing to accept afterwards? Like, will people, you know, be up in arms and saying that we don't want a central bank no more, because the idea that we're on the third central bank already, most people don't know the history that the prior two were not wanted, and the charters were canceled. But now we're 100 and plus years of a charter that has not been canceled or been questioned. Even that whole movement of audit the Fed, it gets downplayed. So will the people want a central bank at the end of the day? I think was going to be a big question, but the government's dependent upon it. So we'll see how this all unfolds when the market does actually correct the way I believe it will.
And I want to come back to this, which you touched upon a couple of topics I have more questions on. But before that, let's get to cryptocurrencies, because there's, people have started like, full-on food fight arguments over cryptocurrencies, in my circles. So do you see cryptocurrencies as a way to shelter one's earnings given the current volatility and weak dollar policy?
That's good, very good question. Now, the word shelter, that's one thing that I would not probably incorporate that shelter into that statement, just because it's a new technology and it is extremely volatile, as you can see from the fact that if you check the market cap, it's green for an hour and it's red for a full day or two. So it will not actually shelter your wealth, in my opinion. Only thing can actually do that is what is actually money in of itself, and that's precious metals. That's the only way I believe that you can be. That's the only way I would feel comfortable, anchoring my hard work, my energy, my time, and everything into something that can't be easily printed or digitized the way that the blockchain can be. So I would say shelter, but I would say that it's a great opportunity to be a early adapter, into something new that has a lot of promise. So I believe there's a lot of people out here that are Bitcoin millionaires or whatnot, people who basically saw the paradigm shift happening right after 2008, 2009 market, crisis or whatever. And they saw that an alternative was presented. So they jumped in and got Bitcoin for 25 cents or a dollar or whatever it might have been at that time. And now they're reaping the benefits of having adapted into that philosophy early. So I believe that the paradigm shift has already happened. The world, pretty much everyone outside the United States of America that follows monetary matters knows that the Federal Reserve is coming down the home stretch as far as being trusted as an international medium of exchange. So everyone's diversifying, and that's the whole idea of de-dollarization. Everyone now is basically looking for ways to get out of the dollars. So I don't see cryptocurrency as being a shelter. I see it as being an alternative as well as another hedge that has the potential of being somewhat of a monetary sponge, because, and this is another thought, I believe that, the central banks of the world that can print money anytime they want, they're going to utilize the blockchain and cryptography to stave off the idea of this hyperinflation of all the currencies that will inevitably come, because governments need to feed themselves continuously by borrowing. So government's going to have to print. So I believe central banks are eventually going to start pumping money directly into cryptocurrencies, which will inflate the prices, of course, but it'll keep things kind of even keel for a while, to where as a currency, national currencies continue to be inflated away, the cryptos will probably go even with them, to where they'll always rise, but it'll be presented as, you can have either one. But at the end of the day, we'll see if the gold and silver prices, if those are able to, either stay the same so people can take some of that liquidity and buy some cheap metals, or if everything goes haywires, everything in the forms of gold, silver, precious metals, cryptos are all going to go through the roof. And if that happens, that's going to be something worth seeing for those that actually have some of those in their possession. But as far as it being a shelter, I wouldn't say it's a shelter. I think it's a good monetary sponge that's going to be able to absorb some of this liquidity that's about to be pumped into these markets. But I wouldn't bet my entire life savings on anything that's digital, because I believe that's kind of where they want this to go anyway. So, but to be involved in it and experiment with it and learn from it, definitely a good opportunity for a lot of people, I believe.
So how do you discern between a cryptocurrency that is a legitimate investment option as opposed to one that is likely to collapse?
Good point. Good point. So I've actually been working on some things myself, because I've never been one to preach cryptocurrencies, but I myself am familiar with them. I've been involved in that sector for a couple of years now. So I've been studying a lot, but I've never really preached it through Rethinking a Dollar, just because I'm more of a sound money individual that says if you don't hold it, if you can't hold it, then you truly don't own it. So I would never say, you should go out and get involved in cryptocurrencies. But there's a lot of technologies as well as a lot of innovative things that's going to be introduced through the blockchain, which I think will be very productive and helpful for a lot of people. So I was trying to, narrow it down to, some categories that might be useful to help people understand. So far, what I've come up with is the idea that there's basically three primary functions that I would consider a worthwhile investment strategy in looking into cryptography. Is one will be the technology, and the other one will be the privacy aspect, and then the other one is the usability. So those three categories is kind of what I'm looking at. And so in the technology, you have various tokens such as Ethereum. You have a lot of ERC20 tokens that spun off of Ethereum. Are companies with great teams behind them that are promising some financial disrupting type things, which would definitely be worth looking into further. And so there's 1,500 cryptocurrencies and tokens. So I will be kind of careful which ones I look into, but they're the ones that are probably carrying the most weight as of now are higher up on the market cap. So they're worthwhile looking into. But, there's at least 4 or 5 that I have in mind in that technology sector that will be something worth considering. And then you have privacy. And so a lot of people are concerned with the idea they're trying to remove cash from us. And, as my shirt say, they demonetize gold and silver. So people are realizing that the whole goal with introducing us to blockchain and allowing it to become more mainstream is the fact they want us to become used to the idea of having digitized coins and tokens outside of what is already a digitized dollar. And so the idea that privacy is not apparent is not really an option in Bitcoin, Litecoin, out of the primary ones that you know about. But there's other ones such as Dash, Monero, Pivx, and Clocoin that are more centered on you being able to make exchanges without anyone being able to monitor it. So I believe those aren't going nowhere. And then on top of that, you have the usability ones, and those are the ones that are being positioned now as payment methods. So everyone, I'm sure, is aware of what's happening with Litecoin and the possibility of it becoming a primary a currency that will be exchanged amongst people. And then you have a lot of the spinoffs of that same open source code, such as Vertcoin, and you have Emmercoin and Namecoin. So all of those coins there, they've been around for a while, and they are capable of being used in a daily transaction because they're fast and not necessarily secure, but I'm sure that technology is coming. So those three categories there is what I would kind of base the idea of if you're going to get involved in a sector, try to lean to one of those three there, and you'll probably 1 or 2 out of each one of those should probably be good if you're involved in those and familiar with them.
And diversify?
And diversify, correct. Yes, definitely.
So Venezuela recently adopted the petro as a cryptocurrency. Where do you stand on their decision? And if you advise against it, do you believe it is possible for a state to have its own backed cryptocurrency and successfully have a stable financial market?
Well, that's interesting, and I'm happy that the country of Venezuela is utilizing the opportunity to get involved directly. So they're pretty much going to be the first nation that publicly comes out and says that the petro is coming, is here. And on top of that, from what I'm hearing, it's based upon the Ethereum platform, and so they are beginning or are going to begin the whole ICO type of thing, and I think they're trying to go for about 5 billion or so. And so the question will be then, can the public get involved, and what platforms will list those coins or whatnot? And so I think it's good for them because they're in a dire need of needing to be able to raise some capital. And it's unfortunate that the idea is noteworthy, and I think a lot of other countries will probably join that same ship. But for Venezuela, I think their problem goes a lot further than just not having enough funds. I think it's their whole political structure. And so being that Maduro is someone who's in power, who was a former bus driver that now became president based upon being good friends with Chavez, and so all that right there is a mess that's unfolding right before our eyes, and it has to do with just their political structure, their ideology, you name it. So I don't think the cryptocurrency, the petro, is going to actually benefit them much, but I think it's good for other nations to see that you can do it. Now it's just a matter of how does U.S. respond officially, because anything that says petro, anything that goes beyond the Federal Reserve note and the petrodollar hasn't really stood the test of time. So we'll see how we intervene in that. And so also you have Russia and China that supports the petro coin. So we'll see if they decide to step in and be that shield to allow the petro coin to get up off the ground. But it's going to be, I think this year, by the end of this year, we'll have an idea as to whether or not it'll be allowed to become a true source of payment for oil leaving Venezuela. But it's still kind of early to tell because it's still a new concept, and I don't know if they have all the kinks ironed out yet. So But if it becomes available for the public to be able to invest in, I myself will definitely look into it. Not sure if I would actually purchase anything from Venezuela because, once again, how would I be able to redeem that petro? I can't, have barrels of oil in my home. So not sure what it'd be worth to the public, but to governments definitely could be used, I'm sure.
Yeah, I think if it was, well, maybe any other country besides them, I think it was like a novel idea. I mean, Russia, for example, I think is, I think you need a country that has at least a fair amount of transparency with the government spending, and they have a lot of embezzlement issues in the government, and that could cause some, basically confidence issues in the currency that I think are just from the the level of people, the average person having confidence in them, which I see in Venezuela. But I think I agree with you. I personally wish it was a different country trying it.
Yeah. And keep in mind that Russia has a crypto ruble, or the crypto ruble, I believe that's what it's called. So it's already in paper. It's already been put before legislation there to where, to my knowledge, I did a video on it a while back, and I want to say that it's been approved and it's coming, if not already up in the works. It's not officially available to the public, but they're actually going to probably have that as an alternative legal tender there in our country that'll probably be used in global trade, as well as that whole Euro-Asian area that they're looking to do deals with all the bordering countries. So the crypto ruble is another country that has a currency, cryptocurrency, that will be utilized. And so they've made it to where it's going to be solely controlled by their bank, so you won't be able to mine it or anything like that. So, I don't think that'll be good for the people overall, but, I don't think the United States stands a chance at trying to say, hey, you guys can't do that to trade oil or whatever, and because who's going to stop Russia? So yeah, so Russia is another country that has one in the works and ready to be announced any minute now, I'm sure.
Yeah, I think that's I'm wondering why I didn't hear anything about that, but yeah, I'll explore that. In terms of personal finance, so common citizens, they usually, or ones who are able to, they invest in cautious strategies like 401ks, IRAs, Roth IRAs, annuities, and hedge funds. Do you think that these are also, I know the answer, but do you think these are also vulnerable during the bursting of a financial bubble collapse?
Yes, definitely. And so, and of course, it's all my opinion, of course, not able to give financial advice, but, history has shown, if you just look at any other country outside of the United States of America that has actually gone through some type of market correction or collapse, as some people like to say, the stock market, everything has been labeled as safe. Everything has been labeled as conventional financial assets have all suffered big time. So I don't see anything happening within this country being any different, other than the fact that if it does happen in this country, it's going to be a ripple effect that'll just rip across every other planet and every other market, and it'll bring everything down. But the whole idea that you have basically 3 or 4, I actually put together like a graph that I haven't released yet, but 3 or 4 or 5 mainstream forms of investment tools. You have the equities, you have bonds, you have real estate, you have all the spin-offs of mutual funds, and all the creation of these annuities and insurances, all these paper-based financial assets that have been put in place to keep the wealth of people in the system. And so it's offered to the public as a way to, you invest, into these markets, and you'll get a return in 20, 30, 40, 50 years. In actuality, all of this, retirement scheme in and of itself is a newer concept. And so the actual idea of the pension was, to my knowledge, the first thing that came about to reassure people that, if you work really hard for us, we will be responsible for making sure you live the latter part of your years comfortably the way you live, when you were working for us. But then that was all shifted with the ERISA Act of 1974. So it went from basically the companies taking responsibility for their employees to now it's shifted to the people. And so you factor in the fact there's no financial education or monetary literacy ever taught in school by design. Most people don't know how to even take care or balance their own checkbooks or debit cards nowadays. But so to shift that level of responsibility onto people in the form of a 401k, 403b, or anything like that is not very safe. And then it's all tied into the markets. That's all, as a lot of people say, are rigged, and they're being propped up by all this easy money from this last hiccup we had. And so, and that's one thing that really concerns me for the retirees and the baby boomers that's entering retirement right now, is the fact that they're not aware of the fact that, you know, this part of their life, everything they saved up to this point is basically one market correction from evaporating. And so if you look at the Dow Jones charts, and it's amazing that if you try to Google the Dow Jones charts at any of the primary Google searches that pop up, it never gives you the full scale. It gives you a watered down version. It's very straightforward. It doesn't show you the entire span of where you see those major dips of like the 99.com bubble, 0809, to where you see it go up and then it just drops, go up and drops. And so if you just look at that right there is scary to me, because it's saying that any minute now we're at all-time highs. And if this thing corrects or drops at any percentage at the same way it did in 09 or 99, 2000, that's going to hurt. That's going to hurt big time, because that's, as some people say, 50, 60, maybe 70% correction. And in my opinion, there's no recovery from that, because if the market is basically being propped up by easy money, we can't have easy money forever. So, you know, where's the money going to come from? So I don't think the stock market and all those conventional assets will be the same when things do correct and the new economy is introduced, and how we, you know, the whole idea of investing, I think, is going to change when this next market correction kind of happens, I believe.
Again, what about, you know, those are like kind of the traditional conservative, cautious strategies. What about, so day trading, commodities, futures, and then you talk about precious metals. What are like some of the, would you recommend more people get involved in that, or would you say like kind of stay away?
Good question there. So when the day trading, the futures, and all the things out there, those are, in my opinion, those are for experts, people who know what they're doing, and that's a very small few of the population, because it requires a very unique skill set in order to recognize and read markets, to be a good analyst, to be able to, you know what you're doing. So those are not what I would consider investment strategies. Those are careers. Those are things that people do to get quick gains. And so I believe that the people involved in those markets, day traders especially, if you know how to work the markets, you can make a lot of money now. But yet, as far as looking ahead for your future, I wouldn't really say that's something that most people should play with, because, you know, you can't really predict when any type of market is going to correct. And so in regards to the normal average person, I think you're better off. You know, I personally, my motto is, especially with how volatile the market's been, and it's going to continue to be throughout this year, I'm not so more so concerned with just chasing yield and chasing, you know, interest on any type of money that I have anywhere. I'm more so worried about preservation. I want to preserve what I do have, believing that if I, you know, position, you know, what I do have, the very little bit I do have, into things that have proven and been able to withstand the test of time, it's inevitable. It's kind of built into the monetary system that, you know, they're going to, the monetary system is designed to inflate to the point of where it bursts. So when it bursts, I mean, anyone who's holding some steady and that has gain in nominal value will be okay on the other end. And the only thing that's really proven that has been sound money. And so that's why I'm really big on understanding, or helping people understand the idea that, you know, the whole rethinking a dollar aspect is really understanding what a dollar is, understand the difference between a Federal Reserve note and a dollar. And the Federal Reserve note is just our national currency we use on a day-to-day basis, that's created by the Federal Reserve Bank and lent to the government and owed back with interest. Whereas in the dollar that has been constitutional based, the one that was mentioned in the Coinage Act of 1792, is an actual defined weight of silver. And so if you actually know that and actually learn to shift your thought process and distinguish between a dollar and a note, then you will know that you probably want to have some weight in your possession, that you can't devalue weight. You can try to play with the markets. You can, you know, dump a bunch of futures into the market to lower the price. But at the end of the day, if you stuck with an ounce of gold or an ounce of silver, you have more wealth than a good chunk of the world at the end of the day. Because you think about it, most people don't really have precious metals or sound money in their possession at all. So and my belief is that, you know, in this new economy or this new market that's coming after everything corrects, anyone who's holding on to any form of weight of metal will do just fine, because it all has to be revalued to some new currency. And it's going to be favorable for those who actually understand what money is and be willing to exchange a little bit of that to get back into the new economy. So definitely, I would say, don't play with fire. But yeah, that's just my opinion. And so if you want to make some money, you want to, get some yield on whatever, you go day trade and do all those things you want. But realize you're playing with paper, you're playing with digits. And at any minute, it can be inflated away just as easy as it was created. Whereas in the stuff that comes from under the earth, that's God's money. So you can't really play with that.
So then given that, what's your recommendation for lower income Americans that may be looking for an investment but don't have substantial expendable capital to do so? I mean, so would you say they should maybe incrementally invest something in precious metals or?
Yeah, definitely. Good question there. Good question there. So my thing is, everyone in the United States of America is blessed enough to be able to afford something. And so you don't have to, a lot of people get discouraged at the actual gold price because I think I didn't look today, but it's like 1,300 an ounce. And so I myself am not a big fan of acquiring, an ounce in of itself, but I am a fan of grams. And so whether it be a gram of gold or a gram of silver, a gram of gold is $40, $45, $50, depending on the premium on top of it. But that's not a lot of money. That's the equivalent of a cell phone bill. But you're buying it with the idea that it's a hedge and a form of insurance against your fiat currency. So, another I was trying to work out a formula to kind of give people an idea of how much insurance coverage you might want to have on your capital. And so I'm playing with some figures, but I can just give you an idea. But for those that are well off, it's no problem to have an ounce of gold, say per $20,000, $30,000 of your net worth, just because if the currency does inflate or hyperinflate, just looking at Weimar Republic from back in the day, that 1 ounce of gold can easily be revalued in paper terms at $50,000, $60,000, type of thing. But yet, if you don't have the type of money, if you're just someone who just a 9-to-5 such as myself that just got bare minimum, then if you have, say, $1,000 of emergency fund saved somewhere, a good way to ensure that 1,000 would be to have, I think it was maybe 4 or 5 ounces of silver, which would probably be $100. And so that's basically 10%. You're putting 10% of your paper asset into metal, which saying that if there is a market correction and that $100,000 is inflated away, you're going to surpass 1,000 plus some in regards to having actual the ability to exchange those metals for paper in a market crisis type of situation. So it doesn't take much basically to preserve your capital in preparing for what could be something we've never seen before on a global standpoint. So just my thoughts, but definitely everybody can afford something. A gram of silver is 75 cents. Like, how can you not find 3/4 on the floor and go to your coin store and get you 1 gram? 1 gram is more than a lot of the majority of the 300 million people in this country have. So you'll be better off. You'll be well off, I believe.
So let's get back to the crisis, because we've been talking around it. Are there steps that the government can take to avoid it? Is the Federal Reserve Bank aggravating the issue by raising interest rates, or is that a necessary move?
Good point there. And so I believe that apart from there being some divine act from above, from God himself, I don't think there's no way of really preventing what is inevitable, just because, like I mentioned before earlier on, is that this is all based upon debt. Every single thing, every unit of account, every monetary unit in your possession, my possession, it's all in debt instruments. So another thing that people don't really realize is that every Federal Reserve note in your possession doesn't actually belong to you. And so it's an actual property of the Federal Reserve that was lent to our government and filtered through our banking system in the form of our hourly wage or whatever, and given to us, but expected back. So it doesn't really belong to us. So I would say that the idea that we're based upon debt, everything is ran by debt. Only way this can continue on is by debt. There's no way of avoiding it, because I think we're reaching a point where most people are tapped out. As you see, with the interbank lending, the chart everyone is putting up nowadays, even the banks aren't lending to themselves because they want to conserve their capital, just because they don't really trust that they get it back. So if people aren't borrowing, then they'll want the monetary base is not expanding and increasing. It's going to stop. It's going to come to a halt. So at some point the government is going to have to, as they're doing now with this whole tax bill of trying to put $2,000 or $1,500 back into the public's hands and hoping they spend more. And then they're going to do this infrastructure spending by borrowing money so that they can create jobs so people can spend more. So we're a consumption-based economy, and our government is dependent upon debt. I don't think there's no way of correcting this. And then on the Federal Reserve note, the whole idea of a central bank controlling the monetary supply and all the mandates they've been given, they have pretty much ran the course of their experiment to the point where this is the first time, to my knowledge, of having a 100-year monetary experiment done by an institution that has basically drained the population of everything that we have. The fact that the Federal Reserve balance sheet consists of mortgage-backed securities. The Federal Reserve is the biggest owner of homes in our country. So not only during the crisis back in the 1934 timeframe with the Great Depression, the Federal Reserve, and this is just take it back a little bit. I found out that there was approximately, before the Great Depression started, there was maybe 30,000 commercial banks, those small private mom and pop banks that people had their savings in. After the Great Depression happened, more than half of those banks closed, but yet the too big to fail banks, or the money trust, which were the Rockefellers, the JP Morgans, those 5 or 6 institutions that right now run our entire monetary system, those same banks were given a chance to grow to where they now have become more powerful than our political structure. So the Federal Reserve is actually the company started by those big banks, those too big to fail banks, and those too big to fail banks are the primary shareholders in the Federal Reserve. So you have an entire corporation that has grown massively and then actually owns physical property and owns stock now and things like that. So the whole experiment, I believe, is coming to an end because there's not much more they can steal from the American people, because we're already indebted to them. We're using their debt in the form of our currency. So, where else can this go? And that would lead me to believe that that's why this whole digital currency, cryptocurrency, is being positioned right at this point in time in history, because they need another alternative. So I did a video about the Fed coin. And so the idea that the Federal Reserve they're studying it, as the new Federal Chairman Jerome Powell mentioned. He says very interesting, and they have some committees and things set up to explore it. So to me, when I heard him say all that, I was basically saying that they already got something in plan, it's ready to roll. Now it's a matter of how do we introduce it. So let us let the people get excited about Bitcoin and all these new coins, because they'll be more willing to adopt our coin or the government issue, because the government has to give the final say so. And if things get bad, as a lot of people predict, the government will say, hey, we're going to get everyone, $2,000 into your account by tomorrow of the new currency, as Jim Willie mentioned, the Shice dollar, or I won't say the other word, but that new currency that's going to be issued, but it's going to come through the Treasury or the Federal Reserve as a digital backed currency. Everyone with a Social Security number will get a wallet. You can just log in at this website here, put your Social Security number in, that's your wallet address. We're going to send you $2,000 to get you started. We're sorry about the market collapse. We're going to get at those. I'm probably going off the cuff here, but we're going to get at those Russians for crashing the stock market. We're going to war. So that's kind of how this stuff always seems to play out. There's someone to point the blame on. In actuality, the monster has grown too large to sustain itself, and it needs a new excuse, or it needs to restart, or need a reboot. And so that's where we're heading, I believe.
And that sounds horrible and timely. So I do have 3 more questions, if you're willing to stay.
Yeah, go ahead. Definitely.
So one more about financial crashes. So Occupy Wall Street, the movement began following the 2008 Wall Street meltdown, but eventually lost steam. Do you notice anything in their rhetoric that was a proper criticism of world fiscal policy? Also, do you think a coming collapse will cause another flare-up of anti-capitalist mass movements?
Not sure on the whole Wall Street movement. I think it was. So the whole anti-Wall Street and just the bringing Wall Street to the mainstream as far as it being, as far as it being known that they run our political system, things like that. And so I don't see that really having impacted much, because most people at the end of the day are going to believe whatever the politician or whoever the president's in office is at that moment, whatever that person says that the reason might be for the hiccups. So if I'm answering your question, if I remember the question correctly, the whole Wall Street movement, I think that's just a cover up, because Wall Street, the too big to fail banks on Wall Street are the biggest problems. And that was evident when the whole idea of the QE was meant to save and provide liquidity for those institutions that, so that was all a heist in and of itself. But let me see, I was losing my other thought. I had something in mind. Can you repeat that? It's the second part of that question again.
You mean, did you notice anything in the rhetoric that was a proper criticism of world fiscal policy?
Okay, so just to chime on that briefly. Now, what has been interesting is how, since the whole hiccup of 0809, how the whole SDR, that whole conversation really came into the light, as far as the SDR being put into play as that next world money that's needed. And then you hear a lot of those acronyms, the BIS and the World Bank and all those institutions prior to the crashes of 0809, I never knew anything about. And so those institutions, I believe, stepped to the forefront to kind of take away some of the attention from Wall Street and the central banking crisis, to where now they position those institutions as being somewhat of like saviors, saying that I think was the BIS mentioned something about the fact that the U.S. the economy is a little bit unstable. It's of a concern to us. And so all that rhetoric that they've been coming out with has really become more of a way of diverting attention from the primary problems, when the primary problem is the Federal Reserve Bank of itself, because that's the primary and the biggest bank. So I think that what we've heard and what we're hearing so far is designed to keep the too big to fail banks out of the mainstream news, and they're using all the international companies to kind of be the good guys coming in saying that things are a problem now. We need to dial back on this and dial back on that. But that's my thoughts, and I hope that answers your question.
Okay. So last two questions are a little more about YouTube and kind of your channel.
Mm-hmm.
So I noticed that your channel does not talk so directly about current political events. Mm-hmm. Do you think that political buzz blurs the truth concerning financial news?
Good question there. I do believe that it is possible to get caught up in the political landscape, which is a diversion from the true problem, which has to do with the money. You follow the money, you find out all the crimes and everything that's been meant to be swept under a rug. And so I, a while back, got away from the whole, Democrat Republic, because that whole system, of just having two parties, but they're all intertwined. They all went to the same Ivy League schools. They're all in the same societies and groups. Doesn't really do us justice as saying that's a true political structure. I think it's more so it's being shown to be somewhat of a fraud when you have a guy who's labeled as an outsider, such as President Donald Trump, comes in, and then you have every prior president, Republican or Democrat, saying they're going to vote for Hillary regardless. And so that in of itself let me know that these people they're following the same script and the same narrative dealt out by somebody. And so I don't really get into the political side of things, because I don't think it really, at this point, it really matters, because we're a debt-based economy. We need debt continuously. I know whether it's Obama, Trump, or Hillary, whoever's in office, they're going to have to borrow the difference in order to fund the government. So nothing new policy-wise is going to be implemented. At no point will we ever have I forgot what the word is called. When you don't have a deficit, you have a surplus, right? So the chance of us having a surplus, is never going to happen, in my opinion. And I even question the surplus we had under Bill Clinton. So no matter who's in office, whether it was
that was my next question. Was it a real surplus, or was it just a positive yearly surplus?
I at that point was too young, never really did any deep diving, but from gentlemen I've interviewed and talked to, they basically maneuvered some of the numbers. I mean, they shifted some of the numbers, did some debits, some credits type of thing, and made it look and appear as if it was on some very positive type things. But that's another thing with the statistics being given now. only a person who has sole confidence in their political figures would take those figures for what they are presented as. So in the history books, Bill Clinton will go down as, the only president in the 21st century or 20th century that ever, ran a surplus. Okay, but if you don't know economics, if you don't know how the governmental system worked, you'd be like, oh, that's great. The Hillary Clintons, they were, who really knows? That's the thing. Like, even if you look at former people who speak out against them, such as David Stockman, and you have another gentleman, I can't think of his name, but he's a guest on a Greg Hunter show a lot, Paul Craig Roberts. Those people were economists that actually worked in different administrations. And I believe they themselves mentioned that those numbers weren't really as factual as they want the public to believe. So with that being the case, I don't get into politics that much, just because it doesn't matter who's in office. We're going to have to borrow. We're going to have to, devalue the dollar, and that's going to rob people of purchasing power. The cost of living will go up, and the standard of living will go down. So that's baked into the cake.
Yeah, I think that's a fair statement, because like I said, I think a lot of the steps that, for example, Trump is doing, they're just helping. They're helping to spend more money just in a different way that President Obama would have. And it's like you said, it's still a debt-dependent mechanism. The federal spending levels for whatever it is, whether it's education or healthcare or whatever. So I think that it's unfair to use these ridiculous debt and surplus terms as political footballs. Last question, and then we're gonna close. So the business leaders, from Mark Cuban to Warren Buffett to Michael Bloomberg, have been vocal critics of the president since the early days of his campaign. Do you think do you think their criticism is justified at all? If not, why? I mean, obviously you're not super political, but do you have any views on billionaires opining on this?
Good point there. Good. I can answer that. And so, you named a couple of gentlemen that are billionaires. And so when you have billionaires, in my opinion, that come out and speak against anything that the president is doing, I believe they're more so doing it just to get in, just to voice an opinion, because no matter what they're coming out against the president for, on the financial side of things, their pockets is so long and strong that, I don't think that they're going to miss a beat or skip a beat in regards to their returns at the end of the day, because all those gentlemen own a good portion of this country, if not, plus some. So at the end of the day, when those people speak out against the president, it's more so the fact that they're leaders in businesses, they're business owners that, want to present like they're like, or they have an agenda, basically. So I don't take it for one bit of grain of sand or anything like that, because anybody that's in this system, if you have billions and millions, you've been allowed to accumulate that much wealth by the system, you have a role to play as well. You can't shake things up, and you can't say or do anything that reveals that the group, what they call the deep state. And so you're not going to speak out against anything that will reveal the truth. So you're going to just play along with it and say, hey, Trump, that's going to hurt my workers or whatever it might be. But at the end of the day, your pockets are deep. You're fine. You're not really concerned with it. So I don't take any of that seriously, just because, these people have to keep things appearing as if, there's a good guy, bad guy. The mainstream media, has done a great job of kind of trying to throw Trump under the bus, but they haven't really dealt anything or given anything that's substantial. And then you have the whole liberal, Democrats and liberals, how just because Hillary, didn't win, regardless of the fact that she was, under investigation during her campaign, and the fact that, she could be literally indicted any minute now for crimes that we would just be blown away if people really knew about. People don't really care about that. It's just the fact that Trump is not a part of the establishment, from what we know. And so he's an outsider. So now I guess I heard all kinds of things. He's a racist. He gropes women, all that stuff. But he's in the Billionaire Boys Club, so he knows what's going on. And so those billionaire boys, they have a job. They have a job to keep things as is, because they don't want to lose anything, and they don't want most people to wake up and gain true freedom and true liberty. So yeah, I don't pay that much attention. That's all talk to me.
Yeah, so I think that there's a lot of fairness in everything you said, and absolutely, like, you have your ear closer to the wall, or whatever you call it, closer to the ground of the markets. And, in closing, this is Rethinking the Dollar, Mike. You can find his channel, Rethinking the Dollar, on YouTube. And I think you could, if you rewind, you could probably see all of his other contacts. I can't see it now because he's minimized. But um, anything else you'd like to say? Any other channels that you want to talk about that you'd recommend for the viewers?
No, well, Ramon, thank you for having me on your show. Definitely, I'm gonna link everything so people can find out the great work you're doing over here. So I believe there's there's a lot of space in the alternative media world for everybody because everyone has an opinion, everyone has a particular angle that they want to position themselves with. So appreciate you for having me on. And then what I would want to tell people is there's a lot of great people out here that are doing work daily. So some of my favorites, Greg Hunter from USA Watchdog, Gregory Manarino, definitely. I've had him on the show a couple of times. And also just, for educational sake, the RTD University page where I've had all my prior guests. I mean, some of the videos are a year or two old, but yet the knowledge and the information shared is priceless. It goes beyond any type of time frame because it's meant to give people a better understanding of monetary matters. And I believe that at the end of the day, if you understand the history of money, you'll be able to make somewhat of better practical and more realistic financial decisions with your money because you won't be so quick to want to give it over to an advisor who's going to tell you to just buy and hold type of thing. So other than that, I appreciate you for having me on. Look forward to continue to support you and follow you, and definitely probably have you on my show as well and get your thoughts. And so thank you for your time and energy and everything you're doing for the alternative media world, buddy. Appreciate you.
Absolutely. And there's there's other channels I'd like to introduce you to. There's there's the Anthony Logan show that I watch all the time.
Okay.
So I think more shows should at least incorporate a little talk about the market into, because it's easy just to talk about Covfefe and hair and Hillary's and cigars and whatever. So this was a lot of learning. I'm gonna have to rewind, go back, look at anything I want as a tip. So thanks again for your generosity, and thanks for everybody for tuning in.
Thanks for having me. Good luck with everything, buddy. Appreciate you.
You too. Have a good night.